Jai, good afternoon or good morning for you. Can you just tell us that what essentially is happening with the markets? Till now, it was looking as if Nifty is slightly decoupled with some of the other emerging markets. What's happening in US, some of the other commodities. But today, when there is a risk-off trade, we're seeing an extended decline for our markets.
You nailed it, Pankaj. You said this is an expected correction, and that's what is happening, and it's healthy for the market that it's coming down. And the zone for the market to find support is about 8,050 to 7,950. So once the market gets into that zone, the short-term froth that's been built up in the market is actually getting corrected. I think the market is bound to reverse sharply from that level. And last time when we spoke about India being an outperforming market. That's the reason why we saw the market perform so strongly. It's not a case of decoupling. It's just the markets finds candidates that are outperforming the rest from time to time. That's exactly what happened to the Indian Nifty. So so what is happening? Everything is like a textbook procedure. So what's happening is all welcome. Let's see what the market does closer to 8,050 and 7,950. I think that is a very strong reversal area, and we expect the market to head much higher. And we are expecting 8,700, 8,800 in the short term. And you also know that over a 9 to 12 months time frame, I'm expecting the Nifty to scale record highs closer to 9,660 on the Nifty.
Right. So, as you're saying, it's going by the textbook. What to watch out for? Say if we break 8,055 levels, markets can go another 100 points on the lower side.
Yeah, that's the corrections are very difficult to fathom and nail where exactly the corrections will stop. Because the larger trend is higher. You should be willing to give away a few points. You can't be left behind. That's the major risks rather than trying to nail the low near the exact low of the correction. Corrections are very difficult to fathom. So once you start getting into the comfort zone of where your correction is quite comfortable, you start building positions. And when I say start building position, you got to be selective. Banks are going to do well, and some of the pharma stocks are going to do well, and one or two stocks in the FMCG space are going to do well, and they're going to lead the market from here on.
Right. How would you essentially rate the move in what's happening with the dollar index and probably pound? You think that will essentially decide in the near term where the markets would go?
Yeah, I'm in the habit of deciding what the market is going to do based on price. So based on price, now that you touched upon the pound, I'm expecting the pound to go much lower. So could probably mean that as should be expected in a bullish way. So with regards to dollar index, I think this is the last leg of the correction in the short term. We are looking at the dollar index to hit about 102 to 103 in the short to medium term. So that's something like a 3 to 6 months time frame. I think the dollar is going to strengthen from here on, and it's going to be quite positive for the dollar basket from here on.
Right. So if the dollar strengthens so much, if GBP is going down, probably euro is also going on the lower side. Why essentially Indian markets would do well? Dollar going up is generally a risk-off trade for emerging markets.
No, if you recall, when we spoke about the long-term projection for Euro INR, that is still intact. And if you recall the last time when the Euro INR went from 91 to the 60s, the Indian markets outperformed the world and did fantastically well. And that is in the same position the Euro INR is placed. We are looking at the Euro INR to strengthen in the extreme short term, and once that is done, that will be the upward correction completion. Once that is done, we're going to see the Euro INR come down once again closer to the 60s, and that's going to drive the market. Why it's going to drive the market? That's beyond me, and it's not within the scope of this discussion. But but we have a precedence that the last time the INR strengthened against the euro, it was very bullish for the Indian market.
Right. As far as crude is concerned, that's another big risk, which has rallied till 50. But you think majority of the correction, majority of the up move is done? It's almost up 85% from the Feb lows.
Yeah, it's a classic risk asset, and it's time to time has a very good correlation with the equity markets. And once the correction for the crude is done, we're going to see the uptrend resume for the crude. It's got some more, from a medium term, it's got some more upward movements. But in the short term, we're going to see a correction come down to something like 45, maybe even $40. Once that will be a healthy correction for crude. And as I said earlier, it's still got much more room in the short to medium term. So let's see. We are expecting the crude to hit something closer to $60. So it's a healthy sign that the market is also trending in that fashion.
Right, and let's talk about some names here in India. What would you make of Tata Motors, the recent move over there? As you said that GBP is likely to go down. That's one of the key reasons, from where Tata Motors gets its revenues. So fundamentally, it's negative, but on the technical side, can you just tell us what's happening with the Tata Motors?
Yeah, I spoke to one of your competing channels, and I said I'm bullish on the auto space, but there is a pair trade that's going on, which is bullish on Tata Motors and negative on Eicher Motors. So that's going according to plan, and we are seeing Tata Motors outperform Eicher Motors, and I expect Tata Motors to go closer to something like 490 to 500, and I expect it to continue to outperform the similar stocks within its auto space. So autos be performing well is pretty important for the market. It has been leading the market since 2009, and the structure for the entire auto space is quite positive. And I think any negatives that you see for Tata Motors is going to be short term.
Right. As far as financials are concerned, Yes Bank, ICICI Bank, any correction over there as a buying opportunity?
Oh, definitely. We are expecting the Bank Nifty to go much, much higher. It's come to the 18,000 zone, 18,000 and change zone, and it's starting to correct. And we're expecting Axis Bank to do pretty well. We expect it to scale somewhere closer to 650 to 700, and ICICI Bank in a similar position. But from the front line space, Axis Bank is my top pick. From the second line space, it's Karur Vysya Bank. Even that will go to something like 650 once again. So the entire banking space is looking quite attractive. The correction that we are seeing right now is a welcome opportunity.
Right. Something like a IndusInd or a Yes Bank, which is already at a new high, that will continue to give moderate returns from here on?
Yeah, definitely. The rising tides lifts all boats. So, we are expecting Bank Nifty to hit about 24,000 from a 9 months to 12 months time frame. So obviously, it can't be single-handed, lift from ICICI Banks, SBI, and Axis. It's going to be the entire space that's going to participate. But you'll see outperformance coming in. Yes, IndusInd and S Bank have been doing tremendously well right now. But I think other stocks within the space will lead. As you said correctly, you'll see moderate returns coming from IndusInd and S Bank rather than outstanding returns.
Right. Probably about 2 months back, you had told me that Tata Metallics is one name in the metals pack that you would like. I think it was around 100, 105 that time. It's been constantly hitting upper circuit right now. Do you continue to maintain Tata Metallics top pick even after the run-up that we've seen?
I wouldn't call it a top pick. In fact, we were expecting Tata Metallic to hit something like 240 and then correct. But it's gone much beyond our expectation. It's become a four-bagger now, and in technical parlance, we are seeing this as a fifth wave in a large ascent. So when you say fifth wave, it's actually the final leg of the ascent. So we aren't that bullish, but we are putting trailing stops in this position and holding on to the stock. That's exactly what people who got into this position should do. They should maintain some position, but not an entire position. But it's not that advisable to get into a fresh position. Your risk is going to be somewhere much lower. Now it's something like 360 odds. No, your stop is going to be something like 290. That's not a very good risk reward. And these stocks which go circuit to circuit have a tendency to do the reverse once they start correcting. So be very nimble out there. Hold on to the position if you're already holding long, but don't add fresh position. That's the view at this point of time.
Right. How would you look at something like a consumer pack? You in the first answer mentioned about consumer names which can do well. Were you referring to HUL or ITC or both of them?
Yeah, HUL, I like it a lot, and I think it's going to go to something like 1,050 to 1,200. And so ITC I don't like that much, but it's also going to do well. But I am pretty doubtful about it scaling record highs. I could be wrong, but I would rather have my position in a clear, where the chart structure is quite clear. So that's the reason why I prefer HUL. And I think from all the clues that we are getting so far, I think HUL is bound to outperform ITC. So, we have a price objective of about 1,050 to 1,200, just like I said a couple of minutes ago.
Right. For HUL particularly, there was a MSCI rebalancing, because of which it was underperforming in the month of May. Also, results were not that great. But after that, it's given a clean move of 50, 100 points. Still at 900, you would want to buy, or any correction would be a buying opportunity?
Yeah, that's a tricky part. It's always better to get in early, and I wouldn't say the risk reward is unfavorable at this point of time. If you get a correction, I would grab that with both my hands, because I think I'm usually conservative about my price objectives, and looking at it from that point, I think there is still much room for the stock to head higher, and the downside's looking quite limited. So if there is a short-term correction, I would definitely try to add positions to it.
Right. As far as some of these telecom names are concerned, idea is going back to the 98 levels. I think we had spoken that time where you said that downside is not particularly much from here on. It recovered back, but it's coming back to the 98, 97 levels, which was the result low that it had made.
Yeah, telecoms have been a bit of a disappointment. They should have performed much more better than they did. I think we can still give it a little bit of plunge into our capital, but the allocation should be slightly lower. Given the fact that it's not performed to our expectation, we should be a bit more cautious, and that's the reason why there is a neutral stance over there. And we want to see a turnaround coming in these telecom names in the next 1 to 2 weeks. If that doesn't happen, I think we will revoke our allocation from the telecom space. So it's a very crucial time for the telecom stocks. Keep a watch on that.
Right. Coal India, how would you look at that name? It's particularly a name which has done well, or we can say that it's looking good despite all metal stocks going down.
Yeah, I think it's more of a choppy move. It's not much presenting a trending move, so we'll be a bit more cautious over there. But we spoke about something similar to it, but it's in the mid cap space, the carbon black space, not exactly coal. So we spoke about Phillips Carbon Black. We saw Phillips Carbon Black and Goa Carbon Black do pretty well in the, just last week. We saw a 20% circuit come through for both of them. So look at this space rather than Coal India. Although this is not a frontline stock, it's a mid-cap stock. You would likely to see something. It may not be as extraordinary as Tata Metallic, but it's going to get excellent returns from this space.
Right. Any view on DLF, India Bull Real Estate, HDIL? Earlier, very well-tracked name, but now seeing a little bit of profit taking coming in after a good move.
Yeah, that's what's happening in the real estate space is quite interesting and important. That is coming down. I think DLF has got much bigger upsides in the medium term. So I would see this as a buying opportunity. Specifically for DLF, not for others. I'm expecting DLF to scale at least 165 to 180. So something a pullback closer to 110 will be a God-given opportunity. But I don't know if it will come that deep, but if it does come closer to that, you should start building position, because the medium-term price objective is closer to 165.
Right. So how should you look at DLF from here on? I mean, the high was about 138 a couple of days back or last week. Now it's at 128. Go ahead and buy, or just wait for a little bit of fraud to clear, because it's a name which is traded very well.
Yeah, as I said, if my projections of correction is correct, I think it's going to likely drop somewhere closer to 115 to 110. But it's not a guarantee. Corrections will exactly head to those positions. So once it's below 120, it's a good strategy to build a staggered position and wait for it to come down. Assume that it's going to come down to 110, and do your allocations accordingly. It is a buy for the medium term, but you got to be allocating in a staggered fashion, not all capital in one go.
Right. And, how would you look at something like the ADAG pack? So, we have DLF, we have India Bull Real Estate, probably the ADAG pack that generally tends to move in tandem. So, any of these names like Reliance Capital, Reliance Infra, or Reliance Communication that you like, is that something where you're seeing one of these three names could do particularly well?
Yeah, the ADAG pack has been quite a bit of disappointment. I expected, Reliance Communications to perform much better than it did. The last time we spoke about it was several months ago, and I expected the stock to go to 3 digits, but it went only till 190 and has now come back closer to the 45, 50 range. So I think I'll give one last opportunity for this space. As I said, it's in the telecom space. if nothing happens in the next 1 week or 2 weeks, I think I'm going to give up on this names and then look at allocating the capital to some other space.
So what would you look out for in RCOM? 45.80 was the previous low. It should not break that.
Yeah, exactly. That's exactly the point. It's a very important low. You can breach it in a marginal way, but in the next 1 to 2 weeks, I should see a very strong up move come through. Something closer to 55 plus to 60. If that happens, I think the long-term correction is done, and I think it's going to resume its uptrend beyond the 90 and hundreds. That's what is the view at this point of time. But I want price action to corroborate that view. We want to see it go higher than 55, 60s in the next 1 to 2 weeks.
Right. And as far as RCOM is concerned, there is a lot of news flow that we are getting. So today morning we had some news flow in papers which said that they are merging with Aircel very soon. They'll form a new entity. So that's 55, 60. Even if it comes up with a news flow, you would take that?
Yeah, it doesn't matter. Price is all important. News, even if it's negative, sometimes market do go up. But if price can corroborate at least on one closing level or an very strong intraday move above those levels, that is also acceptable. So it doesn't matter what's driving it, as long as price is breaching these important resistances, that's going to be important.
Right, Jai. Thank you so much for taking out time for us. Hope to see you again.